Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can better understand what we see in the global landscape. We continue to see improvements in the U.S. and around the world. In fact, we had retail sales numbers that came out, again, for December, stronger than expected. I've repeatedly gone through these update videos that not only go out to, obviously, our clients, but also potential clients of Resney Wealth Management. And I've hopefully that you are really taking this information in. While there's always negative news out there about this is happening or the government shutdown or whatever it might be, again, most investors don't need to listen to that negative news because that's what sells in these news programs. And unfortunately, that doesn't help your portfolio make a return on your money. We're firmly in place in the mid and small cap arena in the U.S. We do still have exposure to emerging market economies. Those have lagged a little bit. But I strongly believe, and again, they're towards the top of our ranking in our system, that we'll continue to hold those. We are going to be making a few adjustments in our portfolio come week end, and I do want to stress that as we continue to see improvements in the U.S. and around the world, that they could have the good possibilities for higher returns on assets. It's interesting to see we still have the 10-year close to 3%. Bonds last year were just really cremated, generally speaking, or various forms of fixed income. Not only traditional bonds, but government treasuries, preferreds, real estate investment trusts, or publicly traded REITs. Things that are sensitive, or investments that are sensitive to rising interest rates, really were pummeled last year. Those continue to be areas this year, in my opinion, that are going to lag as the economy gets better. I firmly believe that they will start, our government anyway, will start to reduce the quantitative easing or the bond buying purchases by about $10 billion a month. And I firmly believe as we get through 2014 that quantitative easing bond buying will pretty much be at an end by the end of this year. Of course, our government has stated multiple times they are supportive of the economy and the markets. What that basically means is there is a chip on the table that says the government will come back in if needed if there's a slowdown in the economy. One of the things that I will tell you is all the indicators we look at, not only at Resney Wealth Management, but also a lot of outside independent research that we also purchase at our firm. We see no recessionary indicators at all or slowdowns in the U.S. economy and or in the emerging markets or in Europe. In fact, what we're seeing is slow, gradual improvement. Again, negativity sells news. Most investors listen to this negativity and they make the wrong decisions. In fact, I talked to a couple that interviewed our firm not too long ago, and unfortunately, their portfolio didn't do all that well in 2014 because they were all slanted really on a tremendous amount of bonds and preferreds. These bonds and preferreds basically brought down the value of their portfolio. So instead of being up on return in 2013, those new potential clients were actually down fairly negative. Their comments to me, though, were I thought bonds were safe. And again, one of the things I try to educate investors is all assets, whether it's bonds, gold, the stock market, real estate, it really doesn't matter, all have risk. And it's how you handle that risk. And if you own those relatively stronger sectors and you sell sectors that are starting to become relatively weak before they're down 20, 30, 40%. I firmly believe that bond investors who overload the boat in the wrong kinds of bonds or income-oriented investments over the next 3 to 5 years are not only going to get hurt substantially either in reduction of principal, but loss of any real return, certainly above inflation. So again, what investors perceive to be safe is often the more risky asset in the reverse interest rate cycle that we are currently in. I can tell our clients at Resney Wealth Management we're on the right side of the fence when it comes to fixed income. We will be making a few adjustments to our portfolio towards week end. And again, if you have questions and you are a client, call our office with your questions. If you are not a client and you want to benefit from our investment management, call our office for a consultation. There is a difference, and we do invite you to experience it. Have yourself a safe and profitable week.